All right, I am here with Joe Gelet. This is kind of a long overdue conversation. I've known Joe for probably like 4 or 5 years, Joe. I think we met during COVID, like digitally, and
Yeah.
just really learned a lot from you in terms of just kind of the secondary industry and just kind of obviously things that need to be done when it comes to compliance, whenever you're working with people and collaborating with partners. But I'm just going to give a quick overview, and then we're going to just kind of unpack the venture and private equity market. But Joe is an investment representative at RF Lafferty. He focuses on secondary market transactions, capital formation, private placements. He leverages his experience in the foreign exchange and algorithmic trading space. And, that's really helped him to identify and execute opportunities in global private markets. And as everybody knows, I mean, private markets is just a massive beast, right? I mean, the way that you look at private markets, whether it's early stage growth equity, now thinking about buyout, there's secondary transactions. Some of these larger franchises are essentially building an RIA. So, really being the leader, managing the business operations, compliance, systems engineering of his division, ensuring high standards of quality and performance is super important. But I've also gotten to know Joe as, pretty much like a serial technology founder. He's built so many cool platforms and tools. He's also the founder and president of CurrencyCentral.com, which is a commodity trading advisor registered with the CFTC and NFA Member. And they offer futures and Forex trading to institutions and individuals. He's got over 20 years of experience as an FX trader. So we've seen some of the key players kind of try to bring trading to private markets, and it hasn't always worked. And he's also built this really cool tool in the past called VC Cross. So, excited to learn all about that, Joe. Hopefully that was a helpful initial intro, and you're going to go much deeper on your background as well. But welcome to the show.
Thank you. It's great to be here. That was a great intro.
Great. Well, Joe, why don't you start off with just taking us back? What did you study? What did you think you wanted to become? Were you like a junior high? I mean, some of these kids that grow up in New York, like when they're in, elementary school, they already know they want to be a hedge fund manager. Not me though. I knew nothing about the financial industry when I was a younger child. But tell me about kind of how you saw the world early in your career, maybe even before college, and maybe some of your early influences in terms of like the sector that you were interested in. It sounds like you built a really strong career in Forex, and just kind of walk us through a couple of those steps in your career journey.
I'm an only child, and I was born in Los Angeles, and I grew up bi-coastal in South Florida and southern Los Angeles. And my father founded Numero Pizza in 1973, and that was a family business, and he expanded it. So he was an entrepreneur. I looked up to him, but I didn't want to be in the restaurant business. It's a terrible business. I mean, he made a lot of money, and he was successful. He had like 300 stores, but he was a stock trader. And so he got me into trading. So even when I was a little kid, I was always interested in trading, and computers is really my thing. So I was really interested in algorithmic trading, because what I always say is trading is really tough, but you can develop algorithms that trade for you and indicators, and it supplements what you can actually do as a human. So I've always been interested in that. And I did currency trading, which is, in my opinion, one of the better markets to trade. I'm not really a crypto fanboy so much, because the Forex markets are represented by the largest banks in the world. So like the US dollar is not going to fail or go to zero. And, I tried to use Coinbase to send money to another country, and I like lost $3,000 because I clicked the wrong button. I mean, you could never do that with Bank of America or Chase. So, so anyway, I was a Forex trader, and then I was pretty successful. I had a strategy that basically never lost. But around 2012 ish, we got regulated out of the market. And it's basically this situation where the big banks lobby Congress to create rules that destroy all their competitors. So there were, when I was trading, like 500 Forex brokers, and now there's 2, and they're horrible. It's like dumb and dumber. In that time, all my friends in FX decided to leave the country because the rules didn't apply. And I know I have some friends that went to New Zealand and Malta and different places, and they continued. I decided to stay in the US. So my friend got me into private equity, primarily around late stage secondaries such as SpaceX. And because I wanted to solve this FX problem by opening a bank, because the solution to this regulatory quagmire is to open a bank. And that's why I formed Currency Central. So I started doing the venture capital and private equity in order to kind of as a means to an end, because the market is so fragmented and so disorganized. And we originally started to just try to buy SpaceX just like an investor.
Yeah.
And it was so convoluted and complicated. We realized there's a business here. So I got my Series 7 license then. I've had a Series 3, all the FX and commodities licenses since 2005. And then when I decided to do the unicorns of SpaceX, I got the broker-dealer Series 7 and 63. And then I got the 24 licenses. And so I attached myself to a broker-dealer to do this secondaries transactions, and both as an investor and an intermediary. And then fast forward, I saw the problems with the market and started building a platform, which you can kind of see behind me. And I think it's okay to show it because you can't, it's kind of blurry, but that's like a public screen. And that's going to go live in a couple weeks. Probably we're just working out some last minute things. And it's going to be like a mega platform, like a platform that links platforms based on firm commitments, for lack of a better word. Like it's not going to be just people throwing things at the wall, hoping that it sticks. It's going to be more about transactions. Because I always say this business is like a mix between trading and investment banking. It's not really trading, because when you buy SpaceX, it closes like a real estate transaction. It's like buying a house. You know, sometimes there's an escrow involved. There's a buyer, there's a seller. When you want to buy Apple stock, you just click a button. You don't really think about like all this. So there's an opportunity, and at the same time, it's a great market because the companies themselves are building amazing things. I've been for the last 2 weeks using Replit to build software. I started a technology, all my technology. I started a company, Macrotech Titan, and we have a team and we build technology and software and AI and all kinds of stuff. Because Wall Street is all technology really now. Yeah, it is. Or at least if you're not using technology, it's. I mean, this private markets is frustrating because the paperwork and the complications, you've got to augment it with technology, and that's kind of my focus. And things are kind of in a good direction, so it's fun. It's good business.
Just because Elon has been in the news recently, and you just mentioned SpaceX, talk to me about your reaction with SpaceX and XAI and just kind of Elon as a whole.
I think I wrote an article that explains kind of, I've spent 5 years thinking about this topic. I think there's basically two kinds of people in society, right? There are makers and there are thinkers. And Elon is a maker. So if you look at it, Elon, he's not only created wealth for himself, he has created thousands of other billionaires. And what SpaceX has created is not that SpaceX itself has created this whole new market for not only rockets, but Starlink and everything else. He's allowed other companies to piggyback on his infrastructure. So he's created, and these are based on like serendipity or synchronicity. In other words, it's not Elon directly doing it. It's the indirect consequence of this like growth. Yeah. So like the people are taking the money. Like I know one guy, like with this announcement, they're a shareholder. They own $8 billion worth of SpaceX. So now they own, I mean, it keeps doubling and the amount of wealth that's created. But what's great is those people are taking that money and then reinvesting it into other startups, which creates jobs. I know SpaceX employees, there's one guy in Tennessee who got like $50 million because he was one of the top rocket designers. And so it's really, I mean, he's created the way you build a civilization is through families and through jobs, or that's our ethos, how we've always done it, not through charity, not through welfare, just people have jobs. And it also gives you a feeling of you've accomplished something, you're creating something. And SpaceX, I think, is the leading paradigm of the future of business, not so much in the sense of what they're specifically doing, but the growth model. And there's no downside. So let me just mention about the takers, the other side of it. The takers are the hedge funds and the people who are trying to carve up society, like Gordon Gekko, where you buy a company, break it up, sell it because if you take a car and you sell it for parts, it's worth like 10 times more than if it's a car.
Sure.
Right? Like you can sell a steering wheel for $200 and so on and so forth. So that's kind of the more private equity approach, which is we're going to buy a business and then kind of cannibalize an industry. And that's super toxic. And that's kind of been the thing for the last 50 years or whatever. And now we're seeing this new trend, which is a value-based function of we're creating a business that is not only good for us, it's good for millions of other people. I mean, I use Starlink. I got a RV. We go RV camping in really remote areas in Tennessee, and Starlink just changes the whole experience because you can watch Netflix. I can work, and you're in the middle of the forest, you know, surrounded by trees and bears, and you can have high-speed internet. And now at night, if you're in a country, not in the city, you can see the Starlinks. There's so many of them. You can, just late at night. So what they've done is amazing. And I think with SpaceX, it's really just, I mean, I think they're working on a lot of things even more than what they can say. Like they're really ahead of the curve, but there's only so much Elon can really, I mean, he's kind of leading the charge of a lot of things. So it's a little bit surprising. I mean, the news that he's going to merge it in one way, but it's in one way not, because he mentioned like a couple months ago, he's going to eventually merge all of his companies, maybe Neuralink, into one, like Tesla, SpaceX. But I think it's just a business decision. It's a smart move because you're maximizing all the verticals. Like the argument for XAI is that they have data. Like OpenAI has a bunch of lawsuits that they're taking data, like scraping the web, basically. XAI has internal data from from Tesla, and they're not like, they have all these verticals. They're able to leverage them. Like it's not just like taking from a bunch of different third-party things. So there's a lot of things going on, and it's a great story. And I also think the last thing is there's going to be a lot of disclosure of technology that's been secret that's coming out regarding energy, regarding aerospace, regarding a lot of the sectors. And Elon, I think he knows that. And so he's kind of staying ahead of the curve. Now's the time to do this because things are changing so rapidly. Like he said, the singularity is here. And I feel it. Like, I think the amount of abundance that's going to come into the economy is going to just skyrocket. And I understand what he's saying. Like, people aren't going to worry about saving for retirement. I mean, you don't want to give people bad advice. You want to save for retirement and do diversified portfolio and stuff like that. But I think what he means is that as this growth curve accelerates, there's going to be so much abundance that it's and especially in a case like SpaceX where they're not hoarding resources. It's like a maker. They're giving to society through jobs, through technology, through different things, products that they make, services. People are going to have not enough time to spend. Money will be worthless, not in the sense like the market's going to collapse, but in the sense like time is going to be your most valuable commodity, and your skills. So all this argument like AI is going to put people out of work, I think that the opposite is true. I think it's all just, I don't even know why that they say that, because Mark Andreessen said the same thing. It's basically human labor, creativity the value is going to skyrocket. So if you're someone who knows how to use an LLM or knows how to cut grass, or a plumber, or anything, a computer scientist, your hourly wage is just going to go through the roof, because AI, there's even a service now where AI can rent a human if you want to do something in the real world. It's kind of funny. So I think Elon is really ahead of the curve. And
how does that work? So when you mean rent a human, you can have somebody just do a task for you?
Right.
Okay.
Like an AI agent. Like there's now AI social media where no humans are allowed.
Got it.
And there's millions of AI agents talking.
Oh yeah, that's Moltbook, right?
Right. And one of them wants you to dig a ditch, and it can't do that. So I think the future is really awesome. And these dark narratives are more, I think they're more, it's coming from the past, because when you have paradigm shift, you always have a lot of pain.
Mm-hmm.
In the old industries like pharmaceutical, like I think war will be over. It's, in the near future, like there won't be any more war. The problem with that is you've got millions of people who depend on the war business, war defense contractors and all kinds of, there's a whole machine behind the war business that has to, it'll shift into something else, but that can be a painful process. So I think a lot of these negative narratives about AI or the financial markets are going to collapse or whatever kind of crazy stuff that's online, I think it's just the pain of transitioning to a really abundant society where we have everything we need.
Yeah, no, I totally agree with you. I think there'll be, we don't have a blacksmith anymore, right? We have a machine that can do large scale manufacturing. That blacksmith probably eventually had to skill up and learn something else. Same thing in the future. We're not going to have Uber drivers. We'll have robo taxis, and there's a small percentage, because Elon spoke at Davos, right? And he was just saying that there's a small percentage of robotic workforce that's managing some of the Tesla factories, and they plan to skill that up and then eventually kind of have a companion that you can buy. But I think what's going to be even crazier is right now with Google, you can set up a free Gmail account. I see Elon just kind of having free Wi-Fi, and it just doesn't make sense to pay for Comcast or any of these providers because in exchange for your data, in exchange for plugging in, you get free Wi-Fi, which is like a utility, right? So, and then with the power of that, there's a lot of data that you can use to train models. I think to your point, you're using Replit, right? So a lot of the engineering work is getting automated. Like if you want to make a change to a website, what did you normally do before? You took a screenshot and redlined the button, and then you're like, hey, I need this button to the left. And then it takes like 3 days for you to see the button, and then it's still in the wrong place, right? Where like with Replit, you like message Replit and it updates. Well, what's crazy about Replit, I've been playing with all of them. Replit has a mobile app. So essentially you can like code in real time from the app if you want to make updates to the website. So it's really, really interesting. And then I think, to your point, he's covered everything. If we lived on Mars, we have the Hyperloop to kind of get around quickly, because it's probably going to take, probably not feasible to do, to build roadways. So there's the Hyperloop. If you need payments, I think he's setting up a lot of that infrastructure on X, right? And communication systems. I think the only thing that he hasn't solved yet is like the food supply. So like, I think in the future we'll have like lab grown meats and plant-based products that will be a substitute for proteins and vegetables, because you can't bring livestock on Mars, right? So I think there'll be abilities to kind of create some type of food replacements to kind of address that workflow. But even from the healthcare standpoint, I think Neuralink is really interesting. There's been some proven test cases to potentially solve blindness and get people to walk again, because there's like nerve damage. So a lot of that stuff is really crazy. But I think what I'm most excited about is the future of care. The robotics and the personal robotics. Right? We've had personal computing for so long with the iPhone, but I think personal robotics is going to be a thing as well.
Yeah, I agree. They're going to make 1 million Optimus robots, and they're the point is that a lot of this, when we talk about it, it's in a nascent stage, it's early stage stuff, but it's growing so fast. I remember in the 1980s, I saw at a neighbor's house, they had a robotic bartender, and he would speak in like a droid voice, and it was funny, but he could make like a couple hundred different drinks.
Oh wow!
He never made any mistakes. It was probably like $1 million back then. But these Optimus robots, once the cost goes down, it's like reusable rockets. So there's so many things going on now, and it's just accelerating, because you have this. I started out by mentioning the cause of it. It's like when developers and engineers have millions of dollars, it frees up their time to build useful things. And not everyone does that. Some people go sailing. Everyone is different. But like what Elon did when he first got his first billion, what did he do? He started SpaceX.
Yeah.
And then after he turned that into something huge, what did he do? He started Neuralink, or whichever order it was, right? So, and you have other people kind of doing the same kind of thing. So there's so many things. Like there's healthcare things using AI to create therapies, using it basically for research. That's taking the 3-year process down to like 3 days, and things are just, it's really an exciting time to be alive, and so it's a fun space to be in. I have kind of a goal that I wanted to do this until I hit a certain amount, and then I was going to get into more technology and kind of shift away from private equity. But I've built the platform, and so that's going to automate things. And so I don't see private markets going away. I mean, that's been kind of a big thing, is people say, well, Carta or someone's going to just make this, that there's going to be no reason to do this business anymore. But I actually see that companies will start to go private versus the opposite. Like in the 90s, your whole thing was you want to get the IPO. But as we've seen with a lot of cases, like even in the case with Tesla and SpaceX. So when Elon started working with the government and outing fraud, the fraudsters obviously were angry, logically, if you're stopping their fraud, they're going to be angry. Yeah. So they sold Tesla stock. But you can't short SpaceX stock. So SpaceX, like Tesla stock, was down like 50% for no reason. I mean, they actually sold more cars during that period because in support of Doge. But so public markets are very tricky, and they can be manipulated to a certain extent, by big hedge funds. So I see more a trend of companies going private and more private markets building out more robust framework as far as weeding out these problems of scammers and different, situations that it's more of a streamlined thing, that it's all just above board. So, I see like more interest in private markets, not less, like in the next 5 years.
And I totally agree. I think, we can automate pretty much everything these days, but what you can't really automate or replace is, when you're in a boardroom and you're talking, deal terms with someone and you're building a relationship with someone, that person has to feel that feeling of trust and a long-term partnership to be able to actually do a deal. And like, when you think about these endowment funds, pension funds that are allocating to fund managers even doing, $2 million, $4 million deals, they're not going to like upload their, they're not going to like connect to their bank account to do a $50 million deal and like not talk to any humans, right? They still got to go out, with those people, get to know them, see if it feels right. Because if they screw up on that investment, that could actually probably impact them having another fund in the future. So it's just so people focused that I just don't think it'll ever go away. But I mean, I think to your point, there's tools and automations and systems to kind of make some of the grunt work go away, so that you can just focus on sourcing and screening great deals and building those new relationships and connections. Because a lot of these great deals come from other relationships. They don't always, if it's on some website or some index, it's probably too late, right? The deal's already kind of closed, or it's or the price is too expensive, or there's an access issue. Just in my opinion, and same thing like with I feel like finance and healthcare, those kind of high stakes industries. Like if you have a stomach pain, you might like message ChatGPT, but you're still going to go to a doctor. You're not going to have ChatGPT, like, a robot connected to ChatGPT, operate on you. Again, today, who knows what'll happen in the future. Maybe it's another thing that Elon builds. But yeah, I'm totally with you on just kind of where the future is heading and where private markets is heading. And I think you're right. I mean, private equity back in the day, when we think about, like, I forgot that movie with Nabisco, I think it was Barbarians at the Gate. That's what people thought that's what people thought of private equity. But now when we think about private equity, it's like, hey, we're a growth operating partner. Let's get you to, kind of the next level of like, the next revenue milestone. Like, let's get you to 100 million. And this is kind of what is going to turn on the faucet to kind of get to those milestones in revenue, so that you can unlock more capital, right? To kind of get to another level. So I feel like these days, private equity, whether you're kind of an operating partner or if you're actually on the buy side, you're a catalyst now versus kind of like a used parts, like a kind of a chop shop, kind of chopping up the parts and selling them. So I'm glad that you made that distinction as well. I want to talk a little more about best practices for building your career as an investor. Obviously, whether you're on the buy side or the sell side. I want to talk about, just some skills that you think are important in terms of just evolving as a good institutional investor. And then I got a couple more topics I want to talk about as well, but would love some inputs, because I know you mentor a lot of people as well.
I think the best advice for anyone who wants to be an investor is to, everyone has a different perspective on life. Like some people, I like to make music kind of like a hobby. Some people like to make art. Some people like sports. There's all kinds of things. So I think that as far as investing, you should develop a plan, like an algorithm that is for you. And it could be different for everyone. Like it's the same advice you give to a trader. You should not be emotional about investing, and you should make a trading plan and stick to it. And it might take you 3 months or a year to make the plan. It could be like, if let's say that you like aerospace, you like planes. I know someone who, since they were a little kid, they're a pilot. They just love planes. Now they have a great job flying private planes. You focus on aerospace and space, and you develop an investment plan that fits that's suitable to you and your personality, and you resonate with certain companies. And it should be more of an instinct combined with numbers. Because if you look only at numbers, the problem with that is, like, I know a fund that only looks at revenue growth numbers at an inflection point. Like if there's 2 years of 300% growth and they have a certain amount of market cap, that's where they invest. And they usually do pretty well, but they've had 2 situations where a company did a down round, and then another situation where they almost lost all their equity because it was kind of like the numbers were exaggerated. So having like only looking at numbers in private markets, it's okay for trading, but for investing, you should I think have a mix of like a Warren Buffett approach, which is invest with what you know. Like he doesn't invest in like AI, for example, because he understands manufacturing, he understands railroads, he understands insurance, and that's the bulk of his portfolio, what he understands.
Sure.
And I think that's really great advice. And then the second follow up to that is they did analysis of the public stock markets of people investing, and the people who made more money traded less. And that's the Warren Buffett approach. It means you invest in a company and you stick with it for 10 years, rather than saying, oh, like I even had people in SpaceX, when they'd see Elon negative news, they'd want to sell SpaceX, and then they'd say Elon positive news, then they'd want to buy. Yeah. And by second guessing your plan, even if it's a bad plan, you're better off sticking with it and seeing it through, unless there's some real like dumpster fire situation. So I would say that's the best approach. You make a custom investment plan that works for you and stick with it. You include data and analytics, but mostly it's looking at companies and seeing the problem that they solve. And I think the best, I can recommend something to the general population, is watch Shark Tank. It's kind of controversial, but it's actually a free course on venture capital with these sharks. And they ask these are things that you and I maybe know, but if someone is new to investing, you can get it on TV free. You can watch all the old episodes. And then what's cool about Shark Tank is you can see after 4 or 5 years some of the successes and some of the failures, and look at what worked and what didn't work, and do all that research and homework, and then like I have a guy I subscribe to, and yesterday I downloaded 10 decks from startups that I really liked, like Revolut, Uber. I downloaded all their seed decks. So these are the seed decks that became massive companies.
Sure.
And then this guy who presented it used AI to just compare what was similar about those. And like, these are the things you can include in your deck. And you can do the same thing with investments. Like what is it that like there are famous cases of people that turned down seed investments in Airbnb.
Yeah.
You know, that someone was pitched seed Facebook and they said, no, I'm not interested. And someone did, or Uber, and the returns were just astounding. Because when you're in the early stage of VC, the problem is you don't know which is going to be the outperformer, the Amazon, and the underperformer. And the solution is you do a large amount of high quality investments. So Y Combinator does 1,000 to 2,000 investments a year, but each investment is multiple millions of dollars. They have huge amounts of cash, billions and billions to invest. So not everyone has that. Not everybody can access those investments. But one person correctly said, what we do as intermediaries is mostly access arbitrage. It means it's just, how do you access a deal like that?
Mm-hmm.
So that's what I try to do in my job, is I try to find hard to access deals and then offer them to investors. The only rule is you have to be accredited, but it's not, you just have to meet the minimum and be accredited. You don't necessarily have to, it's not a huge bar. I mean, if you don't have 100,000 to invest, then you shouldn't be investing, right? You should only invest money you can afford to lose. So that's what I would say, is really invest in yourself, take courses, and develop a plan that resonates with you based on your personality, your background, and everything else.
Yeah, I totally agree. I think, so some of the basic, venture math that's discussed on Shark Tank, in terms of like, how much percent ownership you want, how big the check size is, kind of doing that basic math is super important. Just understand the concept of valuation and if you're overpaying or not. I totally agree. I want to switch gears a little bit and talk about the emerging fund manager perspective. So if you're, obviously if you're an emerging fund manager, or even if you're an established fund manager now, kind of, done with your harvest period, and you're maybe thinking about fund two, and you're trying to get some, deliver some liquidity to some of your early LPs from like your fund one, I think that's where you can possibly partner with someone like you, Joe. Like if there's opportunity to kind of, share things, I'm assuming that could be, because I've seen a lot of VCs, sometimes they'll offer liquidity to their LPs through some type of vehicle, where there's an exit or something like that, and they can get some liquidity. Venture funds also, they can add value by having side pocket deals. They can put together an SPV and say, look, you know what, this is not one of our portfolio companies, but look, we couldn't pass on, OpenAI. So I got to do this. I mean, I had a fund manager that I knew that had a $25 million fund. He was, trying to raise that fund, but he closed 25 million for OpenAI, like much faster. I was like, wow, maybe you should just focus on like doing SPVs, because you can collect the same level of fees and the deal is done. So what just kind of high level nuggets would you say fund managers should think about as their partner with, firms like yours?
Well, I would think about the structure, because we focus on single asset SPVs. Mm-hmm. So it's hard to broker a deal into a mixed fund. Yeah. Like if you're a portfolio manager, like from my trading world, a portfolio manager is someone who buys and sells some asset, whatever it is, stocks, bonds, gold, and then you have a return. So that's kind of like a hedge fund. So if you're a venture capital fund, I would segregate the investments into SPVs. Yeah. If you want to sell them, it's a lot easier to sell an LP interest in a single asset SPV than it is a blended fund. It's not impossible to sell, but it's not fungible. So SpaceX shares are SpaceX shares. or OpenAI or whatever the shares are, people want exposure to an asset. And I'm actually working on a fund that invests in multiple companies. So I'm not saying that that's a bad idea, but it's just that you want to have the flexibility to give LPs liquidity to be able to let them take a profit, and you have it in the SPVs individually.
Yeah, I think the best use case is maybe like a side pocket deal. You're a healthcare fund and your thesis is just focusing on therapeutics. And then you're like, look, guys, if you're interested, I got access to SpaceX and XAI, here's the deal. If you want, it's a separate vehicle, and it's like 2 and 20. But it's just kind of like an additional kind of optional thing. And, you can get some fees off of it. And maybe the GP has an interest in that deal.
I can give some good advice to GPs, to answer your question. But it involves work. And I remember I gave this advice to one GP, and he started laughing and he said, I'm not going to do that because it would be too much work. I don't want work. I just want to receive my checks. And that is a lot of the funds that have access to big companies. They provide, there's one company that told me the shareholder who's getting access to this round, and it was a really hard to get into round, they gave us 70 of our top engineers who are working on our core product. It's like a recruiting business, and they didn't charge us anything for that. Or maybe they paid a recruiter, but they gave 70. So companies are, you don't have to do that. It's totally their choice. But companies are, in a case like a SpaceX or one of these bigger companies, they have no problem finding investors. So it's kind of like picking and choosing whoever they want. Yeah. So are they going to choose the guy that brought them a huge satellite deal, or are they going to choose the guy sending them coffee mugs, right? So a lot of these big investors are providing a lot of value. It's kind of like in the accelerator VC model, they're doing more than just investing. They're maybe providing some coaching. Maybe they find some engineers. Maybe they introduce you to strategic partnerships to sell your product. Yeah. But that's happening, I'm seeing, at the late stage. And that can be a case of if it's a lot of these VCs are investing in every round. So they're providing capital in every round, but they're also providing value to the companies. And it can look different for every company. But if the GP is looking for better access, I would say develop a better relationship with the company and see what value you can provide to them. Yeah. It's no longer the companies that are doing well. The one thing about private markets, it's a one-sided market. It means there's all buyers or all sellers. So in the case where there's all buyers, when a company announces a round, whether it's Vast Data or pick any of these companies, they don't have any problem finding investors because everyone wants to, there's less sellers than there are investors. Yeah. So the more you can value you can provide to the company, maybe introducing them to a key partner, a big customer, or whatever that may look like, not only it's going to help your equity grow because you're investing in yourself in a way. If you're a shareholder and you're giving the company contracts, that's going to make the equity of your shares worth more. So it's kind of a win-win. That's good advice because it's not easy to do. It takes time. It takes effort. You have to have connections. You have to maybe, I know one investor of SpaceX very rarely gives access to cap table. It's very hard to get on their cap table.
It's usually at least two levels in, 2 levels above that you can get in, or can you get in at least one level?
No, they have a pretty wide cap table. They just don't offer it out to new investors. So you've got a core that's been there for a while. Yeah. And there's not lots of new investors, but I know one group, it had to do with a satellite deal. So, the more value you can provide to companies, the better it's going to be for the company, and you'll get more allocation in the next round. Yeah. A lot of VCs don't want to do that because they think I'm an investor. I'm not a founder. I want to just write the checks, and that's fine. I'm not, but that's some advice. If you want to do more, then it can only help.
Yeah. Yeah. And the founders talk too. So they'll share kind of like the goodwill that you provided to, maybe some of these other bigger names. And it can definitely unlock that. It resonated with me when you kind of mentioned the fact that you can't short private market stocks. So if anybody wants to kind of like, that's kind of learning a little more about public markets, wants to kind of learn more, there's a show called Industry. It's pretty interesting show. And the show, I think they're based in London, and it just talks about like the public markets trading desk, and it talks about all the different roles. It talks about like wealth management. It talks about like what happens in the trading desk. But the recent season's pretty interesting because there's a company called Tender that's they're supposed to be like a bank killer. And there's some arbitrage hedge fund managers that are trying to short the stock, based on news. So that's kind of something that's a little gated with private markets. No matter what the news is, it's still private markets. But I think with technology, that will converge with the marketplace of like supply and demand. Like you said, it's all buyers or all sellers. So I think there's some convergence that'll happen down the line.
Yeah, absolutely.
Mm-hmm. Yeah. What would you what are some best practices if you're trying to put together an SPV and obviously work with partners and get LPs to kind of come on board? What are some best practices as you're structuring the deal? What are some things that you shouldn't do? Some things that I've seen in the past is there's some group that has a deal, and then there's maybe like a GP or someone that has a group of LPs, and then they get the LPs, and then the deal's not there anymore because it took too long. Or there's the deal, but then there's no one they just don't have any capital. So then every time, so then there's some trust that's lost, right, with the LP side or the person that has the opportunity. So any just general advice, because I think if you want to start a fund, I think it's good to eventually just do some deal by deal deals, kind of build a little bit of a track record if you haven't worked at a fund before. Or even if you have worked at a fund, kind of showcase some track record. Sometimes it's done deal by deal. But any best practices on kind of just managing that dynamic, because you essentially don't have capital, right? You have a deal, that deal might expire soon, and you're chasing LPs and trying to get it before the deal was closed, right? Or your allocation runs out.
Yeah, I have a quick solution for that. That's a real quick fix, but no one wants to hear that. It's difficult, it's painful, but you basically should not do that, what you suggested, which is you have a deal, you raise money from LPs. What you should do is don't even look at any deals. Raise money from the LPs, raise $1 million, $2 million, and you tell them, I'm going to try to get shares in these 5 companies. These are all hot names. We're all going to do well. I'm not going to don't have them give you a price or anything like that. And you spend 2 weeks and you're hunting for a deal.
Yeah.
And you find one and you execute it. You call the capital before you even look at any deals.
Yeah.
Because what's going to happen is once you start looking, you're going to see the unique situation. An LP fell down. We've got $1 million left in this hard to find deal. Because what I've seen happen a lot of times, a deal, it'll be that situation where a company will have an offer in XYZ company, and it's a hot deal.
It's a 1 week. It's like a 3-day deadline or something like that.
Yeah, well, there's that too. But even if it's not a deadline, it's like $50 a share, let's say.
Sure.
And then they raise all the capital at 50, and then it's sold out, of course.
Yeah.
Now I have another seller, but the price is 60. But they've already had all this capital sign on at $50 a share. They can't go back and say, well, now the price is 60, even if 60 is still a great deal. So you've basically.
So is your solution a soft commitment, or is it a hard commitment just to commit?
You hard commit with no terms. Because like if you read the docs of most SPVs, sub docs, I don't want to name names, but some of the biggest funds in their docs, it says we have the discretion to enter and exit any position that we feel is a good investment. Now they don't do that. It's an SPV. You're investing in XYZ company, but I think there should be more flexibility. You can make a list and just no terms. Like you're going to commit an amount, you call the capital from LPs, you get $1 million, 10 million, whatever the amount is, because that's also going to, this is another catch. It's going to enable you to negotiate better terms. Because like if I have a hot deal, let's say I have 1 million of the hottest company in the world to sell at $50 a share, and I've got 3 buyers. One buyer has the cash on hand, but he'll pay us $45 a share. The other 2 buyers have to call capital. It might take them 2-3 weeks. They'll pay 70 a share, but the buyer willing to pay 55, probably he's going to get the deal.
Yeah.
And so we've created with some partners a firm bid that solves this. The problem is a firm bid doesn't execute on an SPV like with penalties the way it does against direct share transfer. So it doesn't really solve that here. What solves it is the buyer, the investor, who is the GP, should call the capital, and then he has cash on hand. Yeah. And then you can say, well, I'll give you $40 a share. I can wire the money tomorrow once you show me all the details. Sure. And it gives you more negotiating power rather than trying to find a good deal and then raise the capital. It basically, it's a recipe for disaster. And I'm actually surprised that GPs are able to do that. And they do it. It's not impossible. Yeah. It opens up I know one GP that became so stressed from this circumstance, 10, 20, $50 million deals. He calls the capital, the deal falls apart. There's no other deals. He returns the capital. Investors are pissed. I mean, it's a very, very difficult situation to manage in this market, the way that deals come and go. And so that's what I would suggest. And it's not to say that it's not like a hedge fund. You're still going to invest in one company. It's still going to be an SPV. You're just going to give the GP the flexibility that, well, if there's some block on the shares or company A, it's problematic, let's go to company B because there is an opportunity here. You have to, the market changes every day. And the strange thing is, even though it's like a slow market that transacts fast, like in the sense that it takes months to settle a transaction, but things can change in a minute. Like 2 nights ago or last night, the last 48 hours have been confused when SpaceX all of a sudden makes this announcement and then, everything changes. Sure. And you have to repaper everything. So that's what I would suggest to GPs to do that. And most subdocs will provide that flexibility. It's just a question of getting the LPs to agree to that. And how you do that, you build a relationship, you build a track record like anything else. And if you've made money for them in the past, and it can have limitations. Like you're not going to take the money and buy a Bitcoin or something. It's going to be like, there's going to be some rules. It's those specific. I mean, you can limit it to the names, if not the share price. So. Right. No share price, just 5 names, something like that. And you have to, you technically have to, because it's just a moving target. You don't want to be beholden to that price if that price actually does not exist, So anyways, well, Joe, this was amazing. Look, we're over by 1 minute, but I want to ask you for a quick couple seconds to just share. You gave us so much advice, but just one piece of final advice. It could be from a mentor or from a family member to take back with us. I'm gonna say 2 things. The first one is, if you have a doubt, you don't have a doubt. If something feels bad, like there's a red flag, you shouldn't do it. Like once you start to have that visceral feeling, then don't do it. I totally agree with the second one. Well, that one I totally agree with. So I worked at a technology company in the finance industry. And public company, they deal with like investment data, and that's like the thing that the COO said that same exact thing, like on our orientation, and he's like, if anything feels wrong, like just don't do it. You don't want to like not sleep at night. So I totally agree with that one. Yeah, and the second thing is in quantitative analysis, do nothing is always an option. So you don't have to make a decision when you're investing. Like you can just not invest, right? Yeah. There's no pressure like that. And that's an investment too. Not investing is an investment. So if something like you don't like, you can do nothing. You're not forced to do anything. And that's kind of the fundamental paradox of the buy side. because a buyer can make any decision he wants. A seller can only do one thing, and that's find a buyer. But an investor, you cannot invest. And, maybe by not investing in 1 month or whatever, more opportunity will pop up. So do nothing is always an option.
Well, absolutely. Well, hey, Joe, thanks so much. Really appreciate you being so generous with your time. And I'm excited to hopefully meet up soon in person.
Absolutely. It was fantastic. Thank you.
Yeah, it's a good time. Take care. Bye.